The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Looking good, Billy Ray. Feeling good, Lewis. The first chart we're going to look at today comes from our good friend Jim Bartolioni. It's about the Fed funds rate. Folks, this is the real interest rate. This is the interest rate that banks go back together or, borrow from each other against the Federal Reserve at the Federal Reserve Bank. As you can see, interest rates have really started to move. You'll notice the gap that we had way back in 2009 when we started this whole thing. For the last 6 years, we've been at pretty much negative interest rates. Interest rates have really started to move higher. The Fed has not done anything yet, but that is not unusual. If you don't believe that, go into Google and type in the relationship between the Federal Reserve acting and when interest rates move, and you'll see that the Federal Reserve follows the market. In other words, it follows what the bond market is doing. And yesterday we had the bond market down a little over 4 handles from its high, which was a outlier event. I'll show you where it stopped this morning. It was absolutely a perfect stop. I don't know, but I believe we are going to go lower. The question is, we had a very oversold market today in Treasury bonds because the whole world was selling them yesterday, and so there was very little to sell today is my assumption. So that's what happened. Part of what happened yesterday was due to the whole world, well, not the whole world, but a lot of the investment community was heavily short the euro. And there was just nothing else for sale down there. And then once it started up, they start to cover, and it's this, it's a feeding frenzy. And as you can imagine, we went 450 pips from low to high in the euro. And that in itself is a highly unusual event. So right now, what we've done is just went back and forth to see what's happening. But rates are going higher. There is, this is telling you that. The Treasury bond market, the Treasury note market is telling you that. We mentioned early in the week that the Treasury notes, the 10-year or the 5 years, were only 2 and 5 years. We're only rallying to the 382 retracement of the previous highs, whereas the 30-year bond had rallied up to the 61% retracement up there around that 156, 157 level. And then we broke just almost 5 handles to the downside. So that's what we're looking at here today in the bond market. Now, what we're going to look at now is the bonds for today. This is a 4-hour chart that I'm going to be showing you, and you'll notice that the low today that we had down there at 151.12 was a perfect 786 retracement of the low that we had back on November the 8th. So that's your bottom line of what you want to be looking for now, because if we go below 5100 now, which we will eventually, we'll see what happens to it. But that was really a really good spot this morning. It was also a 1.27 of the last 3 hours of last 6 or 7 hours of trading. In other words, we went from 151.24 up to 153 and change, and then this morning we came down and made a 1.27 expansion of that, and that also stopped exactly at the 151.12 area. So that tells you pretty much where we are. Now, on the rally back, we should run into some pretty good resistance, 2.5 points higher up here at the 153.20 level in bonds. That would be a normal snapback rally going of about, 0.382. So that's what we will be looking at. We're having a pretty bouncy move today in crude oil. Crude oil today rallied up to the 786 retracement of the high 2 days ago. That was at $42 a barrel. We've since dropped $2 a barrel in a matter of couple of minutes because of evidently OPEC is out there moving around and see what's happening. Folks, we've been waiting for this week. We were looking for the around the 2nd, 3rd, or 4th. There was a really big date coming in here. I don't think there's any question now that it was December the 3rd because of the action that we got in everything. You know, we got it in the foreign exchange market, we got it in the bond market, we got it in the stock market. To me, that tells me, you know, because I do cycles, that tells you that that cycle has kicked in. Now, whether it's going to kick in with good volatility or not, you know, certainly remains to be seen. So that's the bottom line. With the big drop that we had yesterday in the stock market, you know, it was down 1.5%, 2% or so. That is a sign that, you know, we probably are over a major cycle high, and we're ready to see what this next next correction is going to be. That's the key of what we're watching here. And I'm trying to find one of my favorite charts here, and I'll be darned if I can't find it. I'm trying to find the well, I'll grab it during the break. I'm sure I'll be able to find it at that time. So we'll see what happens from that level. Now, the overnight action last night in the E-mini S&P, I want to put this up here just to show you how the market repeats itself over and over again. Yesterday, on December 2nd, we rallied into the opening on December the 3rd. We rallied 20-some points. And if you'll notice, we had an equal rally last night from the low yesterday at 2040. We rallied up 24 points up to the 2064 level. That was exactly equal to the last rally. But if you'll notice the green line that I have there, and also the 54, in other words, that 54 cycle that's in there is nothing more than 54 15-minute bars. I use that to measure from low to high to see if there's any symmetry. And as you can see, that came within 2 bars of the exact high time coming in when the price was at the right level. Now, if this is correct and the market's going to weaken, this gives a price objective of either today or Monday of 2010 in the S&P. That's down about quite a bit from where we are right now. Remember, we dropped from 2096 to 2054. We dropped 56 points, so we could easily go 56 points, and that would get us down, you know, to the 2010 level. So this market is beginning to look bad, and especially since it came in within 1 day of what we thought was going to be a pretty significant top, and it certainly is. Now, if this top is exceeded and we turn around and, you know, go back and make new highs from where we were at 2104 in the S&P, then this cycle is certainly wrong, and we'll have to wait and see. One of the questions that I'm getting here from the folks here at Tiger TV is the effect on OPEC. Evidently, they announced that they were not going to change their production schedule, and that puts that dropped oil just about $2 a barrel. Folks, I don't understand when they get into these jawboning exercises. I believe me, the folks in Saudi Arabia are excellent oil traders. They know how to move the markets more than you might think. But why they even come out with stuff like that, I don't know. I mean, they should be very vague like the Federal Reserve is and let the market decide what's going to happen. But the announcements come out, you know, and boom, down they go. Maybe it gives them a better chance to buy it. Okay, now we're going to switch over to the gold market here because we've been hopefully buying this stuff down here at this 1050 level, which seems to be a pretty good spot so far. Right now, we've rallied 20-some dollars, and we'll see what's happening here with some of these things, and we'll find out where it's going to rally to. But so far, what we've done is we've rallied up to the 786 retracement of the high on November the 30th, which was Monday. So we really need gold to clear the 1075 level, and then we're going to be off to the races as near as I can tell, because then we would be $35, no, $25, well, $30 off the bottom, and 34 is the harmonic number. So the next number that would cause some resistance will be at the 1081 level. So that's the next level. So we need to clear the 1075 to 1081. We get above 1081, then we know there's a good bottom in here, and you want to look to be a buyer on any pullbacks would be my guess. Again, we did not make lower lows in the silver market. We did make a lower low in platinum by about $1 an ounce, and then platinum has had another strong rally along with the gold market. So that's telling us that that cycle that we've been watching and the pattern that we've been watching in the gold market is most probably correct, because we were looking at 1050. We got down to 1045.50 within $4.50 of that, and now we've had a little bit of a rally. And that's all it is so far, is a little bit of a rally. If you bought the gold, you certainly don't want to let some of your profits go. If you trade multiple contracts, I would suggest that you raise your stop, use an $8 trailing stop, and that would protect yourself with about at least a $1,500 profit if you're going to do that in the gold market. So we've got a chance here. That's basically what it is, and it's nothing more, just a probability of what we're looking at. I was listening to the news this morning, and Mark Zuckerberg actually wrote a letter to his employees defending his decision for he and his wife Patricia to give away their Facebook stock. Folks, that's his stock. They don't have it. The employees don't have any saying of what he should do with his own money. Come on, give me a break. The guy's made what, $30 billion in 10 years. So why in the world, and we'll see what happens, and we'll wait to see what's going on, and we'll look to see what he does. But he's going to give $1 billion away. He said up to $1 billion away over the next 3 years. Well, that'll be somewhere between a couple $100,000 to $1 billion. But when you got billions of dollars, folks, it's impossible to spend $1 billion. It really is. Not counting investments. You can invest $1 billion, but to spend $1 billion, I mean, the most expensive house in the United States, $124 million. So that in itself would, that's nothing. And that house is 30,000 square feet for 3 people. Well, they have servants, I'm sure, but that's quite a bit to look at it. So this is what we're looking at this morning. We're going to have let's see, what was I going to say here? Oh, I wanted to mention one more talk here about the. I wanted to show the Swiss franc. I had a question about the Swiss franc from one of our listeners, and I wanted to bring that in to show you. But this is the daily chart of the Swiss franc, and as you can see, we went up and made a butterfly pattern about a week ago, last Friday, and then, of course, we had the big break. We'll take a break here, 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, looking good, Billy Ray, feeling good, Lewis. We're going to take a look here at, we looked at the Swiss franc before we went on the break, showing the butterfly pattern that was there. Also, what I'm going to be doing now is looking at one of the major cross rates, which is the euro versus the yen. As you can see, about 5 days ago, we were making an absolutely perfect three drive to a bottom pattern, also a Gartley pattern. There were 5 numbers there at the 129 half level in the euro, and it stayed there for 5 days. Exactly at the 786 at 129.67. It never went a tick below it for 5 days, and then of course we had a 5-point rally off of the bottom so far. So what we'd be looking for now with this big move that we've had here in the euro and the euro yen, any of the cross rates, the euro yen, euro pound, euro Swiss, any of those, the euro has been the big daddy rabbit. That's the one that caught everybody surprised. And the reason why, it's 53% of the dollar index. And so you've got to, certainly, pay attention to that. Now, longer term, I don't think there's nothing has changed as far as being able to look at the euro versus the U.S. dollar going down to par or 99. That's certainly acceptable, but this is the biggest rally that we've had in the euro, I believe, in the last 4 years. The other thing that's happened is in the stock market, this is the worst start in the stock market for the month of December in 14 years. Whether that's going to continue or not, we don't know. But the first 2 days of December were down sharply. And those 2 days, by the way, we've talked about this many times here on the air, but the last 3 trading days of the month and the first 2 trading days of the month are the most positive of any of the days is for the market, to be going higher, and we've been sharply lower, on those days. So we want to really keep an eye on what's going to happen here for the month of December, because it's sort of a bad start. Asia was weak last night. China was down just a little bit, but the Hang Seng was down. The Hong Kong market was down. The Nikkei was down quite a bit. The Hang Seng was down marginally also. So these currencies are where the action is, and they're having some big moves. We've watched the pound. I still believe that the pound still has a chance to make another one more low down there at the 148.50 level, but it's so far that has not happened. So we want to watch it. The main thing, folks, is the interest rates are going higher. Just get used to it. I don't think it's going to make any big splash when they finally raise rates 0.25%, that's what they will do, and the market will take it in stride. Everybody's expecting it, so it's not like what happened with the euro, where everybody was on one side of the trade yesterday and there was just nothing left to sell down there, and that's what caused a tremendous market. It becomes a feeding frenzy, especially in foreign exchange, because the people there know that these markets can move really rapidly, and so they stand aside, or else jump on board and add to the fuel to the fire as it started to go up. So those are just part of the things that we're watching when we're looking at some of these currency moves. But I do want to bring I know what I wanted to do here. I just wanted to show you the euro yesterday, how active it was, because this was really wild. This is a 4-hour chart on the euro, and as you can see, we were down there at that 1.27 number. And it went down we made a final little ABCD down there at 105.40. The low was 105.20, right? When Draghi came out, of course, they said they were not going to do anything, and then they said they would, and then they said they wouldn't. But anyway, as you notice there, that long-term trend line that we've had going back over the last month, as soon as that was broken at the 106.40 level, which was the high from December the 1st, the market just took off. I mean, it was nothing but bids, and it just ran, faster than a striped deer, as the hunters say. So this is what's going on. You'll notice the high we made last night was 109.80. We've since backed off 130 pips from that high, so we should hold the 108.40 level, 108.50 level, at least for a day or two in the euro, because I still think with this kind of power that we have coming here in the euro, that we've got more to the downside, more to the upside before we finally turn down again. But right now, with that wide-ranging bar, that's a lot of power, folks. For them to turn around and reverse that in one day would be, boy, that would really be an outlier, man. 877-927-6648.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization
customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Feeling good, Lewis. We have went down and touched the old low in the crude oil down there at that 39.60 level. Dropped $2.50 a barrel in the time when the OPEC meeting was running. Now, whether the market turns around and runs from that level, we'll have to wait and see. We've got gold trading up quite a bit, around 10, 12 bucks an ounce. And it looks like we could be getting ready to see a pretty good move here in gold if we can get it above that 1081 level. But that's pretty much what you're looking at. I put the wrong gold chart in. Sorry, folks. I wanted to put in the chart that we got from Larry Edelson, because if this is correct, we're going to be looking at about 3 weeks of a pretty good market in gold. Now, I'm going to try to get this chart updated, but I don't know how often he runs that neural net, that artificial intelligence program that gave us this cycle. But we want to watch it, because as long as it's working, we certainly want to be paying attention to it. I've had a lot of experience working with artificial intelligence and neural network problems, patterns and stuff. I don't understand how they work, but I was able to finance them. So, but they do have a strong affinity to finding certain patterns that are there. And so we want to watch this. If we can use it when it stops working, then we'll know that. But right now we bottomed in late November, early December, which is about right, November 30th, as a matter of fact. And now, as long as we don't take that out, we should be rallying all the way into March with some nice swings in between, which would be really an ideal situation, because we like to see the market rally up to possibly a nice retracement level, maybe up and around the 1220 level, and then back off, back down to not 1220, 1120, and then back off down to about 1080, and then we'll see what happens. I mean, this is a real far-fetched thing, but as long as this is working, you want to pay attention to it, because it's right. And we've been watching this for 3 weeks, and it's been spot on. So, actually, you could have bought gold without even using this, just because of the pattern that we had at 1050 per ounce. But with this, you might have a little bit of a roadmap of what could be going. And if the roadmap, falls apart, then we certainly want to know that also. But right now, it's doing pretty much what we would like to we'll be seeing happening, with some of these things. Having a little bit of strength in the market so far, a little bit of a bounce, which not unusual, the fact that we gave up so much yesterday. The Dow Jones Transportation chart, folks, is, I thought I had it ready for us, but I cannot find it. But it is really amazing how it's broken down. We broke that long-term trend line from August the 25th that had two perfect 61% retracement hits along that line. We shattered that on Wednesday, and we broke it again on Thursday. So this looks like, we've got a situation that stocks could go lower. Now, whether they go lower on a Friday or not, remains to be seen, because we've had a pretty good bounce off the bottom. And that, we could go even all the way up to the 61% retracement in the S&P, up around the 2067 level, and that wouldn't change very much. But that's what we're watching. But on the downside, if we do go lower and take out the lows at 2040 in the S&P, that would set up the next target is 2009. That's be equal to the ABCD move that we talked about when we started the show. I'll bring this up, and you can do the measurements yourself, and you'll be able to see what we have on the line. Oh, we've got a good, not everybody's good, but we got somebody really good on. David from Florida. How are you, David?
I'm outstanding, sir, and you use that word "good" awful loosely when it comes to me, my friend.
Oh, I keep my standards very, very high. What can I do for you, buddy?
Well, I'm telling you, I've been. I know you get a lot of calls, but if you recall our last conversation, I told you I was getting off the natural gas roller coaster and wanting to move more into currencies, and I've been doing a lot of observation, a lot of back testing, and I've noticed, at least from my viewpoint, a very strong, or at least what I believe to be a strong correlation between the movement in oil and the Canadian dollar. And it looks like almost as if, trading one is fairly close to trading the other. I mean, there's always the interest rate considerations at the central banks, obviously. But like just a few minutes ago, when oil, the OPEC meeting announced that production increased to 31.5, and oil tanked, it took the Canadian dollar with it almost at the exact same time. So I know because I get your patterns on your emails, which I am extremely grateful for, by the way, that the Canadian dollar, from a forex standpoint, is making at least what we think to be a fairly long-term top from a futures exchange standpoint, bottom, because it's inverted on the futures, and I prefer to trade the futures because we can get the volume data, at least the volume on that exchange. So I was just curious, what are your thoughts on the Canadian dollar? I don't know if I know you've been putting a heavy emphasis on gold because I've been listening to your show. Have you been keeping an eye on the Canadian dollar? Or
Oh, yes. I watch the Canadian along with the oil, and Canadian does have an incredible correlation between the oil because Canada is a huge oil producer, so that's part of the reason for that attachment. And they do, because traders know that, they tend to run in tandem, quite a bit. So I trade them separately, based on the patterns, but those are the kind of things that you do want to follow because of that high correlation. The same thing is true to some extent with Australia, but not nearly as much as it is with Canada. Canada is really high correlation to the crude oil. I think Andy Hecht has brought this out in his show on commodities several times, that correlation is, to prove it to yourself, all you have to do is to overlay a chart of the Canadian dollar over the oil, and you'll see that you're pretty much spot on, to the things that you're watching. So that's what I would be looking at.
Yeah, I agree completely. Completely. So it looks like potentially we might be seeing close to at least from what I'm seeing, close to a bottom in oil. At least it looks like it's a bottoming pattern, and there's no way to know what OPEC is going to do in the future, which might set it down even further, especially but for it to move down the way it did, the way the dollar, and considering how much the dollar retraced yesterday. That was, usually they tend to work, in opposite directions. When the dollar strengthens, oil goes down because it's denominated in U.S. dollars. But getting back to the Canadian dollar specifically, because you've got a boatload more experience than I do, because I'm real new to the Canadian dollar here in terms of trading it. It seems to me that the patterns that you like to see, the 618 retracement, 786, and then the 1.27 and 1.618 expansions. It seems, from what I can tell at any rate, it seems to hold pretty accurately, or a high. It seems to have a high probable correlation that those patterns pretty much tend to hold. Would you agree with that statement as applied to the Canadian dollar?
No question about it, David. They're much better in foreign exchange than they are in anything else. They really are. They do better in the foreign exchange. Well, they do good in everything, but they're nearly perfect in the major cross rates like the euro, pound, yen, Swiss. I mean, the numbers are there all the time. They just hit it like magic. What I don't understand is why people that don't understand Fibonacci can't see it. I mean, it doesn't work all the time, but it works a hell of a lot more than it fails. And that's the main thing that we're keeping an eye on here. And it's really it's amazing. They just hit these numbers. They don't always work, but boy, they got a high probability of working. You can just see that in the euro, going down the number.
Sure.
It came within 15 pips of the exact, long-term butterfly pattern. All the ratios at 127, went 15 pips below it, and then rallied 450 pips. So it's been a heck of a move.
Yeah, I would agree, and I think I might share this in the past, but I have a strong background in math and being an engineer, and at least, granted, Larry, you've forgotten more about this than I know at this point because I haven't been doing it near as long as you, but the homework that I've done, I've gone back on the Canadian dollar, the Australian dollar, and the euro, and I've gone back several years, and I spent a lot of time on this, and it seems to me, from the work I've done, that those patterns seem to hold about 65-70% of the time.
That's
and
exactly right, David.
When they blow, it's because of an interest rate change, is what it seems to me.
Yeah, there's usually an economic event that causes them to change, like yesterday. But yesterday was an outlier event because to see a 450-point move in the euro, you just don't see that. But you had everybody on one side of the market, so there wasn't a lot of selling going on, on the other side of it. So they're in is what the problem was.
Sure. To me, it seemed, at least from what I was observing, a classic, buy the rumor, or in this case, sell the rumor, buy the news when it came to the euro, because I just, I had the, because I trade through TD Ameritrade, Thinkorswim's platform, which is a really great platform, and they've got a feed for CNBC on there, and so I'm like, on the one screen I got CNBC going in, and I'm looking at it, I'm just like absolutely, I was like, man, am I seeing what I'm seeing? You just don't see that kind of move. That's within the speed with which it moved.
Oh yes,
was the other shocking part. I mean, that was like in a blink of an eye.
Well, you had all the cross rates versus the euro, working at once. Euro pound, euro yen, euro Swiss, they were all going at once, and you just can't always handle it that quickly, and that's what happened with it. So that's what made it so interesting.
Understood. Well, listen, Larry, as always, my friend, I greatly appreciate it. You taking my call. I certainly don't take it for granted, and want to extend a heartfelt Merry Christmas to you, my friend, and I really appreciate your assistance, and it doesn't go unnoticed, so thank you a bunch.
You bet. Thank you for calling in, David. Appreciate it.
Take care.
You bet. Okay, folks, while we were talking to David, we've made new highs now in the stock market. We've taken out the overnight highs now in the S&P here at the 2064, and we're trading at 2065. That means we've got a real high probability to get up around that 2068, 2069, which is the 61% retracement of the whole move. Gold also hit one of our important numbers. We hit the 1081 level. That takes it right up to that area where was the 1.27 expansion of the previous move. So that's another reason why we're looking at some of these things from the on gold, but we need and it's still going to go higher, folks. It really is breaking out. I don't think there's any question about it. This is only down $3 from that high, but whether that's going to be anything or not, will remain to be seen. So, but we're really close to the 61% retracement now, within 2 points in the S&P. We'll see if that's going to make too much difference or not. Probably not, but we'll watch it just to see what's going on with it, and we'll be able to notice what's going on from that point. We did go down on this morning. We did stop right at the 61% retracement of the previous day's range at the 2047 level, and now we've rallied 22 points in a matter of, only taken 17 minutes, so it's moving pretty good. So we'll see how this thing runs before we're out for the end of the day. This is the early part of the day, so a lot of things can happen during the day here, but at least we're getting a little bit of bounce in stocks, and there's not going to be another Friday collapse like we had on Thursday. And that was not much of a collapse. It was just a big sell-off, to the downside. So we'll keep an eye on that. Crude oil has bounced a little bit off the bottom, which is not unheard of, because I don't think we're going to get much below where we were trading right now. That's just my own personal opinion, just looking at the chart and looking at gold and look at some of the other commodities. I mean, Andy covers this, but coffee, cocoa, sugar, all of these have turned and have started to make some pretty big moves here. So we want to keep a close eye on some of these, because like I mentioned before, we've got that huge ABCD pattern in the CRB index that would tell us that we've got a chance here very, very soon. If not, just give me 1 second to bring it in here, and I'll show you that it'll probably be happening if it hasn't already happened, and I don't think that is it, but we'll see that we'll be watching here at the level of the ABCD, which we'll do some more work on this over the next few weeks, and focus it as we get closer to the what I think is the D point, but we're not quite there yet. We're having this rally right now that is related to the weakness in the dollar, but we'll have to see what the pattern lines up. So we'll watch it very, very closely to see what we're looking at. We need gold to get above the, as we mentioned at the start of the show, we need gold to get above the 1085 level. 1085 takes us above that, and we'll see. We'll be looking at this, and we'll know where we are, with some of these other markets that we're also following. Bonds have rallied 2 points off of the bottom. The NASDAQ, keep an eye on the NASDAQ, because another 7 or 8 points higher than NASDAQ is the 61% retracement of the move down. Whether that'll have much of an effect on it or not, we'll have to wait and see. The grains had a pretty good rally yesterday, but that also was related to the the weakening of the dollar. So we'll take a little break here. 877-927-6648.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Okay, folks, we are ending up the show here. I wanted to end the show this week with the chart showing the New York Stock Exchange Index over the last 20-some years, with this huge pattern here with the divergences that we had in 2000, 2007, and 2015. And this is certainly falling along with, we're having a rally today, but yesterday we were getting hit pretty hard. This time yesterday we were trading at 2098 in the S&P. We're now 30 handles below that in the midst of a 30-point rally off of the bottom, but that's neither here nor there. That's what's happening. So keep an eye on it. If we close really strong today and gain back all of the losses from yesterday, then this is probably going to be wrong, and we're going to be looking at something that's out of the standard deviations of what I'm looking at, because it certainly looks like we want to go lower. The Dow Jones Transportation has certainly triggered a major sell signal in here, along with the New York Stock Exchange Index. We haven't seen it yet in the NASDAQ, but we are getting, relatively close, on some of these things, to watch. As far as the gold, I still think we're going to go higher in gold. We need it to get above 1085. That would be the first level that I would be watching. We are now $34 off the bottom, which is the harmonic number in gold. That's how we came up with this number of 1081. And so we want to keep an eye above 1085. It's got a chance to really get moving. We're only $2 away, so it's not hard for it to do that without any trouble at all. Crude oil, if we close below $39 a barrel, that sets up $30 a barrel, folks. That's going to really hurt that chart. We've been to $39.60 so far. We're trading at $40 a barrel now. So watch that one, because that's a that's a pretty heavily traded thing. It's one of the big speculative markets. So if that starts to break down below $39, that's going to be a pretty precipitous drop, I believe, because there is a lot of supply supposedly out there. So we'll see. Live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.